Hey everyone, ready for a wild ride through the global financial markets? Buckle up, because today we're diving deep into the Nikkei crash of August 2024.
Yeah, this wasn't just some blip on the radar. We're talking about a financial earthquake that sent shockwaves across the globe. And what's really interesting is that this story has twists and turns and maybe even some opportunities for you.
No kidding. But before we get ahead of ourselves, let's break down exactly what happened. Nikkei crash, yen carried trades, it all sounds a bit like financial jargon to me.
Right, right. So let's start with the basics. The Nikkei 225 is essentially Japan's version of the Dow Jones Industrial Average. Think of it as a key indicator of how the Japanese stock market is doing.
Got it. So what happened to it?
Well, on August 5th, 2024, it experienced the biggest single-day point drop in its entire history,
Whoa, really? How big are we talking?
a whopping 12.4% nosedive. It was like if the Dow Jones suddenly plummeted over 4,000 points in a single day.
Okay, I'm officially feeling some financial vertigo just thinking about that. That's a huge EE drop.
Okay.
So what on earth caused this massive plunge?
Well, it wasn't just one isolated incident. Think of it more like a chain reaction, a domino effect. First, you had rising anxieties about a potential recession in the U.S.
So trouble brewing across the Pacific.
Exactly. Weaker than expected jobs reports, disappointing earnings from big tech companies like Amazon and Intel.
Oh yeah, I remember hearing about that.
Right. And then you had the anticipation of aggressive interest rate cuts by the Federal Reserve, which, the Fed is the U.S. central bank. All of this basically created this atmosphere of global unease.
So bad news from the U.S. set off a chain reaction.
You got it. And then, almost like a surprise twist in a movie, the Bank of Japan, also known as the BOJ.
Japan Central Bank, right?
Yep, they decided to hike interest rates. For the first time in decades, actually. This really caught a lot of people off guard because they had been following an easy money policy for so long.
Hold on, now I'm confused. Doesn't raising interest rates usually mean things are going well in an economy? Why would it trigger a crash?
Yeah, that's a good point. Raising rates is typically a signal of a strong economy. But in this specific case, the BOJ was trying to tackle rising inflation and stabilize the yen, which had been weakening against the US dollar.
So they were trying to control things, but it backfired.
Pretty much. This sudden change in policy, especially after such a long period of easy money, really spooked investors.
Especially those involved in what you call the yen carry trade, right? Okay, I'm going to need you to break that down for me. Pretend I know nothing about finance.
Okay, so imagine this. You borrow money from a friend at a super low interest rate, like let's say 1%. Then you use that borrowed money to invest in something else, let's say a stock, that you expect will give you a much higher return, maybe 5% or 6%. You basically make a profit from the difference in interest rates. That's the essence of a carry trade.
So borrowing low and investing high sounds risky.
It can be, especially if those interest rates suddenly change. And that's exactly what happened here. Investors were borrowing yen at those super low Japanese interest rates and then putting that money into higher yielding assets in other countries. When the BOJ hiked rates, it suddenly became more expensive to borrow yen. So everyone who was doing this yen carry trade had to scramble to sell off their assets to repay their loans.
I see, and all that selling caused a ripple effect, like a domino effect, that contributed to the Nikkei's plunge.
You got it. It's like a house of cards. One thing shifts and the whole structure can come tumbling down.
So it all makes sense now. But I have to ask, why should I care about a market crash all the way over in Japan? Does this really affect me?
That's the thing about the global economy. It's all interconnected. When a major market like Japan sneezes, the rest of the world can catch a cold.
Okay, so not just a local cold, but like a global pandemic.
Exactly. This Nikkei crash had a ripple effect on other markets across the Asia-Pacific region. South Korea, Taiwan, Australia all took a hit and experienced significant drops.
Wow, so no one was immune.
Not really. Even the European and U.S. markets felt the tremors. Both the Stoxx Europe 600 and NASDAQ futures dipped in response to the Nikkei's plunge.
So this wasn't just a Japan thing. It really highlights how interconnected the whole global financial system is. But what does that interconnectedness actually mean for someone like me? How does this impact my day-to-day life?
Well, think about it this way. A global market downturn can affect your retirement savings, the value of your investments, even the prices you pay for things at the store.
Yikes, okay, now you're making me nervous.
It's all about understanding the bigger picture. We're all part of this interconnected web, whether we realize it or not.
I'm starting to see that. Now let's talk about the tech sector, because I've been hearing a lot about AI hype finally meeting reality. How does that tie into all of this?
It's a great question. The Nikkei crash actually happened around the same time as a broader cool down in the tech sector globally.
So like a double whammy.
Yeah, kind of. Now, while AI is a game changer, no doubt, there was a ton of speculation driving up valuations in the tech industry, especially around AI companies. Think of it like a balloon that was blown up with too much air. Eventually, it was bound to burst.
So are you saying the AI bubble has burst? Should I be worried about my tech investments?
It's not quite as straightforward as a bubble bursting, but there's definitely been a correction in the tech sector, with the Nasdaq officially entering what we call correction territory.
Correction territory.
Basically a 10% decline from its recent high point. But it's super important to remember that markets are cyclical. They go up, they go down. It's totally normal.
So there's still hope for my tech stocks. Phew. Okay, but what about the bigger picture? Are we all headed for a global recession? Be honest.
Well, it's not all doom and gloom. Remember, even after a crash, markets tend to rebound. And in this case, the Nikkei actually saw a pretty impressive recovery.
Oh, how impressive are we talking?
A 10.2% jump just one day after the crash.
Wow, that's like it took a punch and bounced right back.
Right. And that actually suggests that investor confidence wasn't completely shattered. Plus, if you look at the economic forecasts, Goldman Sachs, one of the big investment banks, is actually predicting decent global GDP growth for 2025.
Really? Okay, so maybe things aren't so bad after all.
Well, there are still some potential risks on the horizon that could mess things up. Things like U.S. trade policies and immigration restrictions, but we can delve into those after a quick break. Stay with us. All right, so let's dive into those potential risks we were just talking about, specifically those coming from the U.S. The new Trump administration has been hinting at bringing back some old policies, and those could have a big impact on the global economy.
Okay, give it to me straight. What kind of policies are we talking about?
Well, there's been a lot of chatter about a 10% tariff on all imports.
Whoa, wait a minute. 10% on everything. That sounds pretty huge.
Yeah, it could be. Essentially, tariffs make imported goods more expensive, which means higher prices for you and me, the consumer. And economists call that inflation. And some experts are saying that these tariffs could push inflation in the U.S. as high as 3%.
Ouch, 3% inflation. That's definitely not good for my wallet. But how would that affect things globally?
Well, remember how we were talking about that interconnectedness? Higher prices in the U.S. can slow down how much people spend there, and then that has ripple effects outwards to other countries. Some estimates even say that these tariffs could take 0.4% off of global GDP growth.
So tariffs equal higher prices, maybe less spending, and even slower global growth.
Got it. So what about those immigration restrictions? You mentioned those right before the break. How do those fit into this whole economic puzzle? Another great question. If immigration gets reduced, the U.S. labor market could really feel it, particularly industries that really rely on migrant workers, like agriculture, hospitality, construction. Fewer workers means that wages might increase, which leads to higher costs for businesses. And you know what happens next, right? Those costs often get passed on to us, the consumers, in the form of higher prices.
It all comes back to prices, huh?
It really does. Tariffs, immigration, inflation, spending. It's like this delicate balancing act where one wrong move could make it all come crashing down.
All right, so we need to keep an eye on all that. What about the central banks we talked about earlier? What are they up to now? And how is what they do going to affect things going forward? We talked about the Bank of Japan's surprise interest rate hike, but what about the Federal Reserve here in the U.S.? Are they thinking about doing the same thing?
Well, the Fed is actually expected to go in a different direction than the BOJ.
Okay.
Most people think that they will be cutting interest rates maybe even as low as 3.25% to 3.5% by the end of 2025.
Hold on, back up. So the BOJ raises rates and the Fed cuts them. It's like they're playing a game of financial chicken or something. What's going on? Why are they going in opposite directions?
It really all boils down to the different economic situations and goals in each country. The BOJ is trying to fight inflation and stabilize the yen, which we said earlier has been getting weaker compared to the US dollar. The Fed, on the other hand, is focused on helping the economy grow and trying to prevent a recession in the US.
So it's like they're each trying to steer their own ships through this rough economic sea.
Yeah.
But how does this back and forth between central banks affect me?
Central bank decisions can have a huge impact on your finances. What they do has a direct influence on interest rates, which then affect all sorts of things, from mortgage rates to the kind of returns you get on your savings accounts. Keeping up with what they're doing and why can really help you make smart financial decisions.
Gotcha, so knowledge is power. Speaking of smart decisions, what about opportunities? We've talked about A lot of risks. But what about the potential upsides?
Mm.
You mentioned earlier that Japanese stocks might be undervalued at the moment. Could you explain what you meant by that? Is that something that I should be paying attention to?
Yeah, even with that crazy crash, the Nikkei showed that it can bounce back. Remember that 10.2% jump the day after? Well, that means that investors still see value in Japanese companies, especially those in innovative sectors like AI and robotics. Plus, with the yen getting stronger, and although that might be tricky for exporters, it can also make Japanese assets more appealing to foreign investors like you.
So basically, even though the market took a tumble, there might be some hidden treasures in Japan.
Exactly. It's all about knowing what to look for and thinking about the long term, not just the short term.
Interesting. Okay, Japanese stocks are definitely on my radar now. Any other potential opportunities, any other markets or sectors you're keeping an eye on?
There are always opportunities, even when things are a bit crazy. For example, the energy and utilities sectors tend to do well when interest rates are going up, like what's happening with the BOJ. And on top of that, they often offer really stable dividends, which can be a good thing for investors looking for steady income.
So, a bit of a safe haven in the middle of all the chaos.
Yeah, you could say that. What about the U.S. market? Are there any sectors or strategies you'd recommend right now?
The U.S. market is still a really strong one with a lot of potential. Exchange-traded funds, or ETFs for short, that follow the big indices, like the S&P 500, are a great way to get diverse exposure to the U.S. economy. You can think of them as a one-stop shop for investing in a bunch of different companies at once. There's also sector-specific ETFs focused on areas like energy, that's XLE or technology XLK. Those can give you a more targeted approach.
Gotcha. So diversifying my portfolio is important right now, especially with all this uncertainty. You got it. It's like that old saying, don't put all your eggs in one basket. Spread your investments across different types of assets, different sectors, and different regions of the world. That's how you reduce risk.
Solid advice.
Hmm.
But beyond diversifying, what other actionable takeaways can we give our listeners today? What can you, the listener, do with all this information?
Well, one of the most important things to remember is that the actions of central banks have a huge impact on the global financial landscape. Keeping up with their decisions and understanding how they might affect you is crucial.
So I should be checking the BOJ and the Fed websites every day. Maybe setting up some Google alerts.
You don't have to go that crazy, but staying informed is key. Their policy decisions can cause huge shifts in the market, and understanding why they make those decisions can help you predict how things might change and make better choices for yourself.
So it's all about being informed and staying ahead of the curve.
Ex-
Great. Well, we've covered a lot today. We talked about the crazy Nikkei crash and all those risks on the horizon. We discussed how interconnected the global economy is and even explored some exciting opportunities.
we sure did.
But before we wrap up, I want to make sure you feel ready to navigate these tricky financial waters.
It can seem overwhelming, but knowledge is power. The more you understand about how the markets work, the better prepared you'll be to make good decisions for yourself. Don't be afraid to ask questions, talk to financial experts, and most importantly, stay engaged.
That's great advice. Staying informed is probably the best investment you can make, right?
Absolutely.
All right, folks, we've reached the end of our deep dive into the crazy world of global finance. We hope you've gained some valuable insights and actionable takeaways that will help you navigate these unpredictable times. But before we say goodbye, we want to leave you with one final thought-provoking question. Could this Nikkei crash and everything that caused it be like a warning sign for other markets or sectors that might be a little too hot right now? Are there any other places we could see similar problems?
That's a great question to think about. Look at sectors that have been growing super fast because of speculation or what we call easy money, like maybe parts of the tech industry, or even the real estate market in certain areas. The big question is, are those high prices really justified in the long run? What could happen if interest rates go up or investors suddenly get spooked?
So we need to be on the lookout for bubbles that could burst, right? It's like that saying, buy low, sell high. But how do you actually know what's low and what's high? How can I tell if something is overpriced or a bargain?
That's where doing your research comes in. Don't just follow the crowd or trust your gut feeling. Look at the fundamentals. How much money is the company actually making? How much debt do they have? Who's running the show? And don't forget the bigger picture stuff like interest rates, inflation, and what's happening in the world politically. It all matters.
Wow, that's a lot to keep track of. Any other words of wisdom for our listeners as they navigate this crazy financial world?
Always remember that investing has risks. You can't avoid that completely. But you can manage those risks by spreading your investments around, staying informed, and maybe even getting advice from a financial expert. And whatever you do, don't panic. Markets go up, markets go down. That's just how they work. Thinking long-term and having a solid plan can help you get through anything.
That's great advice. Thanks for joining us on this deep dive into the world of global finance. We hope you found it helpful and that you feel more confident about making smart decisions. Remember, even when markets are crazy, there are opportunities out there for those who are in the know and prepared.
Couldn't have said it better myself. Stay curious, stay engaged, and stay ahead of the game.
And until next time, keep exploring, keep learning, and keep diving deep.